thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates. Sometimes it comes from the economic calendar or a combination of that with headline news or geopolitical. And sometimes it gets even more confusing when the market sentiment changes, when good news is now bad news and vice versa. So we try to give an explanation of what's going on and why it's happening. And hopefully, if you're in the business, this will give you some information to kind of follow along. Or if you're looking to refinance or purchase, this will give you the necessary information you need to make an informed decision for yourself if you want to lock in or if you want to kind of hold off a little bit. A little bit about myself is I am a loan officer. We do loans in I work with a national lender. We do loans in all 50 states. So if we could be of any service to you, whether it's a refinance or need the pre-approval and finance your next property, we'd love to be that person for you. We've got a lot of great loans, so please definitely give us a shout. But more than that, we like to be a resource for you folks. If you have any questions you'd like to ask, please reach out. We are here to try to help you guys out. So we'll start off the day with the economic calendar. Every Thursday we get the initial jobless claims. Last week it was initially came in at 200,000, but it was revised slightly higher to 202,000. Forecast for this week was 195,000, and it came in a little bit hotter at 203,000. Now, the good news is that continuing claims, even though it was revised slightly higher last week, still shows it coming down a bit. So it came down better than forecast because, as you see here, it went from 1.387 down to 1.343, even though there's a forecast to be a slight dip to 1.38. So a little bit better than expected. Today we got the news of the PPI, or Producer Price Index. This is inflation on the wholesale side of things. So normally this is kind of like what we dub the Rodney Dangerfield of inflation data. But because inflation is such a hot topic, it's going to have a little bit more weight this time around because inflation's, that is on top of everybody's minds right now. So we'll start off with the headline number, the PPI month over month. So March was a pretty hot month, as you can see here. Initially, it came in at 1.4%, but they revised it higher to 1.6%. Our forecast for April is supposed to cool down a little bit to 0.5%, and it came in at 0.5%. Now, if you strip out the food and energy, which are items variables that we cannot control, that gives us the core PPI, and that's really what we look at. As you can see, it too was pretty hot. It was at 1%, and then we revised slightly higher to 1.2%. Our forecast was showing 0.6%, and it came in a little bit less at 0.4%. So it's year over year. Was in March at 9.2 initially, but revised much higher. As you can see here, that's pretty high, 9.6. But forecast was supposed to show a pretty big dip down to 8.9. It came in a little bit less than that. So the good news is that we saw a pretty big drop from 9.6 all the way down to 8.8, and came in a little bit less than expectations on this. So this kind of giving investors more reason or more hope that inflation has peaked. So this is kind of helping out mortgage-backed securities. As you can see here, we're up now about 36 basis points. The good news is that we haven't really had for quite some time, more than 2 days in a row, where we were in positive territory. Now, these last 2 days, even though it shows red here, we were actually in, because we had the rollover, it looks worse, but it's actually we closed up 14 basis points yesterday. And then today we're up 38 basis points from where we left off yesterday. So we got actually 4 days in a row where we're actually climbing, which is really kind of nice. Now we're kind of approaching this 25-day moving average again, and we'll see if we can break above it or if it's going to keep a ceiling on us and keep pushing us downwards. So let's, I guess, be patient and wait and see what transpires. But good news is that mortgage rates are showing some improvement today, as they did yesterday. Here's the volatility. As you can see here, they dropped almost steadily down through the first 2 hours of the morning, but then they came back again. We've had some volatility, as you can see, up and down again, like a seesaw here. But we're back up again towards close to the highs. Not quite there, but close to the highs for the day. And we'll see if it maintains that for the rest of the day here, or if it continues to climb. Now we're getting these hammers, which are kind of means that we could have a change of pattern here. So we'll kind of wait and see if that will transpire or not. If it's going to be showing too much weakness as we approach the 25-day moving average, or if we can break the other way. So most of the time that's going to be probably the opposite direction. So be uh, be um, be cautious, and probably be better off even kind of locking in if you guys got any rate, any loans floating out there, because this could come back downwards again pretty quickly. So again, we were up 38 basis points, which is good news. And even better, we got the 10-year dropped all the way down to just under 2.83 now. Now it broke below, it's under 25-day moving average now. So we'll see if this can do the same thing. But as of right now, we're actually below the 25-day moving average on the 10-year yield. All right. So last but not least, we'll go touch on what's the average rate for conforming loan limits. These do have points in them. These are just kind of a basis that's out there. And so let's take a look. The 15 years at 4.78 right now, and the 30 years now at 5.41% right now. So if you guys like to get a rate quote, we're here to help you guys out. So please, again, give us a shout. We'd be more than happy to talk to you a little bit about rates. But if you guys, again, got any other questions or anything we can help you guys out with, please reach out. We're here to assist you guys. But if you guys like these videos, please help us out. Smash that like button and share. We greatly appreciate you folks taking the time to watch, and hopefully this gives you the information you're looking for. Again, you guys have a great rest of your day. Thanks so much for watching. Look forward to seeing you guys in tomorrow's video. Bye-bye.